India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It is T+1, Trump +1. The big market reaction has come through overnight, and of course, we'll track the implications of it here for the market, which has done well last two sessions. It's bounced very nicely off the lows. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, Nigel. Morning, Prashant. And I think that's the question, right, that people have on their mind, that whether this Trump trade has lifted India out of its funk. I mean, we've been kind of struggling along. So whether that was the first sweet reaction, so to speak, or whether this is the start of something new and whether these trends will continue.
Well, Trump will be good for the United States economy, and in fact, the markets out there. But what about the rest? You don't know what he's going to do next. So we're getting used to the T+1 and T for the next 5 years. So let's see how it goes.
America first is the ethos.
Yeah, absolutely.
Right?
And that's a bit of a risk as well.
There is a bit of a risk. But, so that's the thing, right? I think markets now become extremely sensitive to any policy. They're not in the White House. They're not taking power. That's only going to happen on the 20th of January. But you will get indications, right? They will talk, and I think markets will react. So I think we should be very sensitive to all of that.
Indeed. Trump is going to do that step, and U.S. economy is going to rock. But will the rest be dancing with him as well?
I must say that one of our young producers yesterday said that, okay, this just means more, more anxiety and more work for us. I said, why? Because he'll announce something in the night, he'll tweet something, and then we'll have to react to it and get ready, with the analysis first thing in the morning. I won't name who, but I think that's a very fair point.
But apparently he never sleeps. So it's burgers and Coke.
At least, Prashant's son as well, at least has gone to school today because Let's get to the action.
All right, well, let's quickly run you through what you need to know as we begin this session. You got, I'm calling it all aboard the Trump train. And I think that's, when I say all, I mean markets, right? Overnight, you look at equities, you look at yields, you look at the dollar. It basically, you got a glimpse of it because all of this was happening through futures in the Asian trade. Because by about 9:30, 10, 10:30, 11, it was all clear. Russell futures, which had started to trade, were up about 6.5%. Dow futures were up sharply. Dollar was up 1.5%. So it's all materialized. It's all been realized in that sense. So those are changes up on your screen. S&P about 2.5% higher. It's the single biggest one-day jump since 2022. Nasdaq 3%, Russell 6%. You look at the Russell 2000 and that 6% jump. So there are two things. One, many were talking about the Russell and the small cap, mid cap part of the US market being like a cheap call option on a potential Trump victory. That is the part of the market which trades very cheap compared to the Magnificent Seven, which has driven the bulk of 60-70% of the US market rally has been driven by just about 10 stocks. Let's round it off. Whereas the 2000 bottom stocks have not done well, and that is the one which did extremely well. The other point is, you may think, well, this is a junk rally. Well, no, it's not. Actually, if you look at the S&P 600 group of companies, that's an index where there is a profitability criteria. Many of those stocks are part of the Russell 2000. That also did very well. Actually, that outperformed what the Russell 2000 did. So it was not a sort of, junk rally, so as to speak, that 6% very much on the table. Massive jump on US yields. The 10-year yield, 16 basis points higher. Now, that is, a couple of standard deviation moves. 4.43% on the 10-year yield. I think for the US market, what becomes important, yield levels matter. Equities cannot rally like this if the yield goes to, say, it goes up another 40, 50 basis points and you're at 5%, right? That's not going to happen. So last night, of course, because it was like a synchronized kind of trade, everything went up, but yield levels matter. Last night, it got ignored, but I don't think it's going to happen for very much longer. Dollar index, 1.6% higher. We are past the 105 levels as well here. All right. There's one more thing, though, which can extend all of this a bit more. Remember, it's still not a sweep. It looks like a sweep. Trump is president. They've got the Senate. The Congress is made up of the Senate and the House of Representatives. They've got the Senate but the House race, the votes are still being counted. And we may not know that over the next couple of days. It's looking like the Republicans will take that as well. If that happens, and when that confirmation comes, I mean, I think you will see one leg higher on things like the dollar, yields, etc. As I said, markets will remain very sensitive to any comments from Trump from the Trump camp on tariffs, and this may happen, I mean, starting now all the way till he actually takes power early January. Tonight, and this has taken a bit of a backseat, you got the FOMC, and a 25 basis point cut is the consensus call. Guidance should be interesting because, you've got the elections just finished. So I don't think markets are expecting very much by way of guidance coming through from the FOMC. Now, let's talk about just one more thing. China's NPC is underway. It finishes tomorrow. That is the National People's Congress. And if you remember, the talk was that if Trump were to sort of come to power, China will be ready with a fiscal stimulus, a bazooka, just to protect its interests. We've not seen that yet. Will we see that between today and tomorrow, I think, is a question. Or will they now wait for Trump to actually sort of, say what he wants to do as far as tariffs are concerned? So just circling back and tying in the levels here, Nifty is near the 20-day moving average now, 24,567. We left off at about 24,500 yesterday. So about 70, 80 points away is where the 20-day is. That's the first hurdle. Above that, the 40-day exponential moving average comes into play. 24,740 is the 40-day. That's the big number. A decisive close above these levels will mean that the Nifty starts to look at retracement levels from the all-time high of September to the recent low. Bank Nifty, supports are 24,200 and 24,075. These are supports for the Nifty. Bank Nifty inched higher. It's not yet broken the high of 52,577. So that's the first level. And on the way up, the 61.8% retracement for the Nifty Bank is 52,835. Trendline supports come in at about 50,470. I would say the market, I don't think we'll see a continuation of the very sharp moves we've seen over the last 2 days. A little bit of consolidation after the tremendous run that we've had. I think that is due today and maybe over the next couple of days as markets really wait for what we will hear from Trump. There is the FOMC. It's relegated to the back seat, but I think that is still important, and we still got this China thing to wait and watch out for. Earnings are coming through, and that is also a reminder at the back of one's mind that there is a bit of a slowdown as far as earnings growth is concerned. GIFT Nifty will come up on your screen, should give you an indication. It's about 100 points lower on the GIFT Nifty. Surabhi.
Yeah, absolutely, Prashant. That's a comprehensive wrap. So just to add, yesterday in terms of the trading action, everything was going higher, right? Yeah. Almost all parts of the US market, but in particular, even legacy auto stocks, the ICE engine makers, even they were going higher because this is so much about make America great again or America's golden age and, Trump will fix it and all of that. So a lot of the legacy industry stocks were also doing really well. Having said that, we all know what happened to Tesla, 16% up. And let's see what that means for EV tariffs as well, and which way policy swings. So that's something we'll watch out for. Bank stocks were trending higher. That's what happened. And by the way, the crypto move is still on this morning. A lot of the cryptocurrencies are still tracking green. Over the last 24 hours, the gains have been anywhere between 5% to 16% on things like the Dogecoin. And obviously, you've got the Bitcoin above $76,000. So when we stopped trading yesterday, it was $75,000. Now it's $76,000. So this is how the money is moving. There is flow of money even in the crypto market. And we'll see what that means for an emerging market like us. By the way, beyond the US Federal Reserve, where, of course, the expectation is that 25 basis points rate cut, there's the Bank of England today. And the BOE is also expected to cut rates by about 25 basis points. So let's see what the central bankers start telling us over the next 24 hours or so. In Asia, it's a very interesting reaction. Some of the Asian markets had started a bit negative, but that's quickly changing. The Nikkei is the only one that's actually down about 0.6% right now. But the Chinese markets have recovered. Hong Kong is up almost 1%. Singapore is higher. So Asia is a nice shade of green as well, barring Japan. And let's see if we actually are going to be in sync with that, because it was the second day of gains for our market yesterday. The Nifty has recovered a little over 800 points from the consolidation low of around 23,800. From that zone, we've galloped back 800 points. The question is this the real thing? Is it a durable move? Have we put in a durable bottom? If you're looking at the FPI numbers, well, it'll make you a little edgy because that FPI selling still continued. There was no change there. About 4,400 crores of selling once again. Domestic institutions offset that very nicely by almost 5,000 crores of buying. But the whole question on flows and foreign flows, that's very much still open in the air and we have no answers. I think we just have to wait for the global trade to settle. Talking about some of the earnings, as Prashant said, earnings are in focus as well. Tata Steel, Nigel tells us that at least operationally the performance looks good thanks to the India business, and we'll get to it in a bit. Apollo Hospitals was a good number. Top line growth was quite good. Margins expanded. So let's see how Apollo reacts. Blue Star also fairly steady. 20% top line growth. Margins were in line. We don't have too many howlers. Today is a big day for earnings, by the way. And I'll leave you with the stocks on the board. M&M, Lupin, a couple of consumer names like Trent would be reporting. Imami, Indian Hotels, and then a couple of interesting PSUs like NHPC, Cochin Shipyard. Remember, Bazaar Dock's performance was really good. So can some of the other PSUs put in that decent show as well? We'll watch for it. But I think it's going to be a bit of a mix of the global trade, making sense of the whole Trump move, and also local earnings today.
You know, on the Bitcoin move, there was a note that came out from Samco Securities, and they said that there is a correlation between what the the cryptocurrency world does with the Indian markets as well. It shows some risk appetite. And on the graph, at least, it looked like there was some correlation. So let's see how that goes. Now, Trump has delivered, because that's what the equity markets were factoring in. But will the Fed deliver what the markets want? That's the cue for later tonight. And Trump, as we know, is going to be good for the US markets and US economy. But what about the rest of the globe? Because yields moved up, the dollar index as well, that's firm. Which brings us to the bounce that we saw on the Nifty. Was it a dead cat bounce, or is there more in store? So that makes today's session extremely important. What about the FI action? They continue to sell. They sold close to 4,500 crores in trade yesterday. The shorts are still not covered on index futures. Though if you look at the stock futures, well, the long positions are at multi-month highs at around 11 lakh contracts or thereabouts. So that's how the FIs are positioned. On the index futures itself, you have close to around 75% of the position, 74% of the positioning on the short side. And as we have been saying, the clients as well as the FIs, they are at opposite ends of the spectrum. Moving to the levels that we'll be looking at very, very closely then. Going by the options data, going by the recent resistance levels, the 20 DMA, that becomes very, very important. If you can get past that, we need to get past the 24,550 mark. Then the bulls will have their eye on the 25,000 odd mark. Near term though, support comes in at around the 24,000 odd mark. We're going to be starting off in the green. Going by the last couple of trading sessions, the bulls will like to believe that we can recover from the low point of the day. The Nifty Bank. Yesterday, that was plagued by that selling that we saw by the FIs, and also it played out the weekly expiry in trade yesterday. So that index needs to perform today, and the bulls will say that this one holds the key for the day. The resistance comes in a few hundred points higher than these levels, close to around 52,600, 52,800 odd, while you have support in crucial technical levels at around 51,500. And HDFC Bank will have to play its role. You have the MSCI announcement that came in overnight. The expected inflow is around $2 billion odd, which is nearly around 6.5 times the average daily volume. So that's going to be the stock that's going to be in focus for today's trade. Remember, this is with regard to the free float adjustment that was due. The other one is Reliance Industries. That seems to be trying to bounce back. And now it's very, very close to its 20 DMA, which comes in at around 1,350. If this one that's been underperforming of late, if it can get past this level, then you'll have both those engines firing, HDFC Bank as well as Reliance Industries. So we start off in the red, but I think that dip gets bought into at some point.
Well, the global setup is definitely still very, very positive. So let's see if the bulls manage to make a hat trick today. Let's move on with the equity call of the morning. We have Alexander Redmond of CLSA listing out some points to consider for regional equities with Donald Trump's return to the White House. First, how the Trump campaign proposed further cuts to U.S. corporate taxes will impact the EM versus DM EPS growth differential and thus relative performance. Second, he says the disruption to growth and earnings from the implementation of a punitive tariff schedule. Third, Alexander adds how Trump's agenda may prove inflationary, impending Fed and regional central bank monetary easing, supporting the US dollar, and finally, geopolitical concerns from Trump's isolationist foreign agenda. So lots to watch out as the first couple of weeks of Trump's presidency begin.
Okay, all right, let's get some perspective in. Hartmut Issel is head of equity and credit Asia Pacific and chief investment officer at UBS Wealth Management. We've got Drew Pettit, Director, U.S. Equity Strategy and ETF Analysis and Strategy Research at Citi joining in as well. Gentlemen, great to have both of you here. Appreciate it very much. Drew, good to see you back after yesterday. I hope you got some sleep. There are two things I want to get to. One is, so we got a 2.5%, 3% kind of move on large cap indices overnight in the U.S. if will equities be able to ignore yields for too long, bond yields for too long? Or you think that'll be an impediment? If yields continue to move higher, equities will have to take notice. And second, is there one more leg higher left if they call the House for Trump as well, and then it actually becomes a sweep? Because they're still saying it's close but leaning Republican. What's your sense?
So right now we're working under the assumption that the Republicans are going to take the House. I think the last probabilities we've seen have actually still remained relatively high. So under that circumstance, yes, yield may stay in focus. And to be honest with you, while short term we could see very elevated levels of sentiment, basically keep the S&P high, maybe push us to as high as 6,100 for this year. Longer run, it's hard to justify multiples, much north of 22, 23 times on the index if we don't see 10-year yields, let's call it 4 or sub 4%. So yeah, to answer the first part of your question, yes, longer run, if yields stay elevated and rate volatility stays high, that does potentially put a cap on upside in U.S. equity markets.
Okay, well, let's see how this plays out. Right now, it's just a roaring rally. Let's take the conversation to Hartmut Issel as well. Hartmut, so the question really is on India from our perspective, because I don't know if we can take a blanket umbrella approach to emerging markets anymore. In terms of, is Trump good for emerging markets? We don't know what he does with China. We don't know what view he'll take on India, for instance, in terms of some tariffs. But what do you think this huge move and this big win would mean for a market like India?
Yeah, look, I don't see a lot of read-through from the U.S. election. Maybe if they're really doing a lot more even on fiscal. I mean, but let's remember, they're already quite stretched. But let's say there's a little bit more. I'd say stronger dollar potentially, or at least not going down as much as we currently believe. Right, is maybe somewhat supportive for the exporters, of course. IT, but look, I have a very different view of India. I held it before the election even. Right, so I did my numbers on India. This gives MSCI India. So I also remember when I was here on the program last time, and what I said was, compared to the fiscal 24, we're going to see earnings growth, not necessarily negative, right, but sort of almost cut in half, right? And the market needs to respond to that. And by now it has, right? So the dip is here. It's a fairly sizable one by now, right? And when I just did my numbers recently, what I noticed was there are some sectors in India, and these are big sectors, especially the financials, things like consumer, potentially also IT, where in the next fiscal year, so 26, and it sounds far away, but it's really sort of starting mid next year, where we're already moving into that, when actually the negative effect or the pricing effect on margin reverses. So as much as I thought, okay, the markets are nifty, MSCI India, they have to respond negatively in a sense, or they have to correct. We have that correction now, and now we're 6 months away from a period where I think then in the upcoming fiscal earnings growth re-accelerates to some extent. So in other words, I think for investors, whether it's global or whether it's directly in India, it is a good time to start to positioning for that. I can easily justify over 10% upside on a 12-month basis. So yeah, much less to do with the US though.
Okay, so a 10% upside possible in the Indian market over the next 12 months. That's your view right now as earnings start recovering, right?
Quite possibly a bit more than 10 even.
Okay, all right.
All right. Hi, good morning, gentlemen. Good to see you. And Dhruv, from someone who has just come out of the phase that you're in, I'll tell you what, it only gets better. Those kids, I've got 2 little ones at home, and it gets better. So don't worry, mate. But let's focus on the markets then, Dhruv. Trump is likely to help the domestic economy out there. And that could lead to a broadening of the US rally that we're seeing. As of, the last 12, 18 months, it's been more of a few stocks that have moved up. Now, you saw overnight, in fact, the Russell 2000 outperformed what the 3 frontliners did. How much of a risk is it to the rest of the globe? Because the US party could continue, but it could come at the risk of some of the emerging markets. So your view on the Indian markets?
Yeah, so interesting here. There was a lot of ways to kind of play global market broadening, right? Like to your point, there was only a few big stocks working in a big way is what it really felt like for the last 2 years. then you started to see a little bit of that value trade, not just in the United States, but globally kick in. And honestly, that benefited Europe, that benefited emerging markets to some degree. So our global equity view right now is Trump and his domestic focus. It probably does help the US. It probably helps sustain momentum, at least near term. Him being in office, the Republicans with a more aggressive mandate as they take the Senate and potentially the House, does help US small cap. Where it probably hurts the most is actually Europe ex-UK, in our view, and then in emerging markets, Brazil and China. So when we think about the Indian opportunity, it definitely looks better to us relative to Brazil, China, even to some degree South Korea as well. So when we're thinking about EM positioning, we don't want to think about broad positioning. We want to be a little bit more selective in a country like India that may be able to withstand a higher dollar and a little bit more, maybe not just a little bit more, but more trade uncertainty in the world. India sets up better to us than many of the other emerging market countries.
You know, Drew, I think you hit the nail on the head. This is exactly what I was sort of grappling with in my mind. Because till now, for foreigners, emerging markets have been one big basket, right? You allocate money to an EM fund and some of it makes its way to India or Brazil or wherever. Do you see that changing? Just from a money flow point, not just your own call, your house call, but in general, will emerging market funds in the near term stop getting the money as people get narrower with their strategies, which means that in the near term, there will be a reduction in the flows coming in, right?
So it's funny you say that because you started seeing people break this out in Trump 1.0. So back then it was kind of EM and it was either an offer on trade. Then you started seeing factors get more popular in some of the ETFs where people were, let's say playing dividends or playing minimum volatility expressions in emerging markets. And then when Trump 1.0 happened, we started seeing people break apart China. Now we're starting to see more active management come into EM as well. So while we don't have these very aggressive kind of all-in flows on EM, you're going to start seeing more selectivity. So for every dollar that goes into EM, it's not going to be as directed towards China, which was a bigger weight in the MSCI EM index, especially at that time. You may see more of that flow go to other countries. So yeah, there may be fewer dollars going to EM, but you might see more dollars going to specific countries that can withstand, some of the concerns, people have around Trump 2.0.
All right, no, that's and we'll take it. Thank you very much, Drew. Great to have you with us here. Hartmut, appreciate you being with us here on CNBC-TV18 as well. Thank you very much, gentlemen. We'll take a quick commercial break here. And we're going to come back in just a bit from now. Lots of stocks we want to get around to as well with our research team. That's what's lined up here when we return.
Welcome back. So the cues are positive, lots of green across Asian screens. The implied open is, not quite in sync with how some of the Asian markets are doing. Let's see how this actually plays out. Could be a little different when the market finally opens. Let's boil this down to stocks then. Our team is standing by with the CNBC-TV18 list of top stocks to watch. And Nigel will kick it off because we have the big numbers from Tata Steel. Nigel.
Well, that's right. Tata Steel's numbers were good, actually. So I'm going with green on this one because the EBITDA number was better than what we were working with. And there's an adjustment out there because there's a forex element on the intercompany debt and receivables that, is included out there. But even adjusted for that, the EBITDA number on a consolidated basis is better. The other expenditure was lower due to lower royalty relating to the lower consumables. So that explains why, in fact, the consolidated number was better. But for Tata Steel, we look at two key numbers. The India business, which is bulk of its profitability, the EBITDA per ton was better than what we were working with. And Europe was as bad as expected, with Netherlands giving you $19 per ton positive number, while UK gave a negative $300 per ton. So $75 per ton of a loss, that's acceptable. Well, the net debt number, that's perked up. So we'll wait wait buy for clarity on the way ahead. The stock should open up mildly in the green because these numbers are an operational beat.
Okay, all right. So Tata Steel, perhaps we're going to see some green over there. Let's quickly move on. Vinny is joining in Apollo Hospitals. Vinny, morning. Good performance here as well.
Yes, good performance here as well. So we're expecting a green here because it was a beat on the margins as well as the profitability front. When you look at it, the revenue of the company, that also saw a growth of around 15%. And that was, when you look at the segments also, all these segments managed to see those mid-teen growth, whether hospitals, healthco or AHLL, that also saw a growth of 14%. Overall occupancy, that has also seen a good improvement on a year-on-year basis, as well as the Apollo Healthco segment. Keep an eye out on that because that has come into profit this time versus a loss last year. So all in all, good set of numbers, operational beat coming in because EBITDA margins have seen a growth of around 200 basis points. 14% is what the EBITDA margin stood at.
Okay, Vinny, thanks a lot for that. I'm looking at Hindalco because Novelis came out with its set of numbers. The net sales were up by close to around 5%. The adjusted EBITDA number came down by close to around 5%. And the volumes were higher by close to 100%. That adjusted EBITDA number includes close to $25 million because of flooding that they saw at their Switzerland facility. Even adjusted for that, you'll have the EBITDA per ton that will come in at around $502 per ton. The reported number is $489 per ton. So the numbers for the past quarter were weak. But the stock will pull back today, and that's because they're uncertain with regard to their guidance going ahead. Earlier, the management said the EBITDA per ton will head back to around $525 per ton. Now they're revisiting their guidance, which will clearly be a negative because it's come out of nowhere. And the net debt number, well, it's perked up a little bit because of capex as well as working capital cycle getting elongated a little bit. And the reason that they are a little uncertain on the EBITDA per ton guidance is because scrap prices have gone up because of a lot of buying we're seeing in China. So Hindalco opens up in the red.
All right, Nigel, thanks very much. Lots of earnings, right? It's a busy evening, busy morning, busy day. Well, let's talk about Power Grid now, which reported second quarter numbers as well. Vivek is here with details. Vivek, morning.
Well, good morning. Slightly subdued quarter as far as Power Grid was concerned. It's missed across the entire all set of parameters as far as the CNBC-TV18 poll was concerned. The revenue is largely flat on a year-on-year basis. EBITDA down 2.1%, and margins have actually contracted close to 190 basis points on a year-on-year basis. Profitability aided by higher other income, and other expenses too have spiked up, but higher other income has actually aided the profitability this time around. Now, talking about the segmental revenue performance, transmission revenues up 2%. Consultancy revenues is up 7.2%. Off a lower base, telecom revenues have jumped up almost 36%. Along with that, the company is also going to be transferring 26% stake in 4 of its projects to the listed InvIT, that is the Power Grid InvIT. Now, FY25 capex guidance at the end of Q1 was close to 18,000 crore. Analysts are expecting a slight uptick over there. Order book remains strong in terms of both when you're talking about the kind of projects that they have as far as the TBCB is concerned, as well as the smart metering. All eyes on the November 8th analyst meet, where there will be more details that will come out.
Okay, all right, Vivek, thanks a lot for that. But Vivek, wishing you a very, very happy birthday. Good wishes, have a good day, and we look forward to the big treat later today. So wishing you well.
Thank you so much.
Well, let's move on. I'm looking at JSPL as well. I expect the stock to open up in the green because the consolidated numbers were mildly in what the street was working with, and the beat came in because of their subsidiaries actually, which did better than what was expected. The India business was more or less in line. So that's why you have the revenue number that was in line. The EBITDA number was better, and the margins as well better. The other expenditure, that came down by close to around 16% or thereabouts, and the gross margin as well expanded, which caused the EBITDA number to come better. Domestic steel business, on expected lines, they had a maintenance shutdown. Exports have been weakish, as also, so on expected lines, we did see a degrowth of close to 11% on a quarter-to-quarter basis. The standalone EBITDA per ton, well, that was in line with what we were working with. The net debt number has moved up. The key trigger is they have an expansion that's coming on stream. 3.5 million tons likely to come by the end of this fiscal, which is important. I'm going with green because the past quarter's numbers were more or less in line, and the EBITDA per ton will improve from here on as spreads improve.
Okay, all right. So that's JSPL. Let's head across to Mangalam to figure out how the quarter has been for Kansai Nerolac. Mangalam, Berger was quite a washout thanks to the monsoons. What about Nerolac?
Well, Kansai Nerolac makes Berger's numbers look a little better. Berger had said that they've gained market share, and Kansai's numbers tell you that as well. We remember we don't have the numbers from Asian Paints coming in yet. So Kansai Nerolac, the revenue actually declined by 0.3%, and the EBITDA as a result of which was down by 22.5% at 212 crore, 177 crore versus 212 crore. The net profit, on the other hand, saw a decline of almost 31% as well. There was a margin contraction too. What exactly happened out here? Well, the company said the margins were impacted by product mix and ongoing investments in capabilities. The overall demand in decorative was affected due to heavy rains and extended monsoons. That's something that a lot of the building products players have been saying. But after the stock opens in the red, let's see whether it sees a recovery or not, just like Berger yesterday, because raw material prices, which initially showed inflationary trends, have now begun to cool off. And good monsoons also means better second half for all these building product companies. So see some red at the open and thereafter recovery.
All right, Mangalam, thank you very much for that. Gujarat Gas is what we want to focus on next. Sonal is here with details. Sonal, morning.
Good morning, Prashant. Well, it was a margin beat, but a volume miss, something that we've seen with other city gas distribution companies as well. So versus the poll, we saw a slight decline in the revenues, but EBITDA was much higher. Margins were 200 basis points higher than the poll, and profits accordingly were higher by 50 crores versus a poll of 254 crore rupees. Sequentially, it was a decline. That is something that was expected as well, but was lower in terms of EBITDA. Revenues down 15%, EBITDA down 4%, and profits were down 6.7%. Volumes as well, it came in lower, 8.75 MMSCMD versus an estimate of 9.1. This was led by lower volumes in the Morbi region because the industrial volumes are not picking up because of lower export demand. But going with green because the margin expansion is much better than what the street was working with.
Okay, all right, Sonal got that. Thanks very much. So we'll keep Gujarat Gas on our radar as well. Let's go across to Sudarshan, who's looking at, I think, Endurance Tech. Morning, Sudarshan.
Morning, Surabhi. So, company has reported good set of results in a tough environment. Profit has increased 31%. EBITDA has moved higher by 20%. Even margin has expanded by more than 50 basis points. And the earnings are led by volume growth that has come in from two-wheelers and three-wheelers, while India passenger volumes and European car registrations have been under pressure. Even on the order wins front, company has bagged orders of more than rupees 120 crore in the Q2. And with this, H1 FY25 total order wins are at 308 crore. Also, they have more than 2,200 crore RFQs under discussion with various clients. RFQ is request for quotations that company will be implementing these orders in coming quarters.
Okay, all right. Sudarshan, thanks for that. Well, hopping across to Upasana, who's here to tell us about Blue Star's Q2 numbers. Upasana?
Well, Nigel, company has reported stable set of numbers. Revenue was above street estimates, while EBITDA margin and PAT stood somewhat in line with the street estimates. Now, coming to revenue first, it stood at 2,276 crores with an uptick of 20%. This revenue growth was mainly led by company's strong performance from its EMP and commercial air conditioning segment. Now, EBITDA margin stood at 6.6% with an uptick of 10 basis points on a one-year basis, while the street was estimating EBITDA margin somewhere around 6.8%. Now, PAT stood at 96% with an uptick of 36% on a one-year basis, and PAT growth was mainly aided by the rise in the other income. Now, order book of the company stands at 6,598 crore with an uptick of 9% on a one-year basis. So, all in all, we are seeing a stable set of numbers from Blue Star.
Okay, all right, got it. Thanks very much for that, Upasana. Let's go across to Vinny once again, who's looking at Walkard. I believe there's a QIP in the works, Vinny, for Walkard?
Yes, there is a QIP that we're keeping an eye out on. It's overall a 1,000 crore total issue size of the QIP. It has opened up yesterday, that's 6th of November. And what we're keeping an eye out on, in this, the base issue size is around 800 crores. There's a green shoe option of 200 crores. And the price that they've decided, the issue price is around 1,105 rupees per share, which is at a 13% discount from yesterday's closing price. So we are expecting some bit of a red on the stock today. And obviously, do not forget that the stock has already seen such a good run up, right? Just the last 1 month, around a 34% uptick. In the last YTD basis, also 170% uptick. So maybe some bit of a red that one could be watching out for on Walkard, given that the issue price is at a bit of a discount from yesterday's closing price.
Okay, all right, got that. Thanks very much, Vinny. So let's quickly recap our list of stocks to watch. The ones that have positive news flow are Tata Steel, Apollo Hospitals, Jindal Steel and Power, Gujarat Gas, Endurance Tech and Blue Star. The ones that have negative news flow around them, Hindalco, Power Grid, Kansai Nerolac and Walkard. Okay, so let's figure out what the great Trump trade has meant for the world of commodities. Manisha is joining in. Manisha, I hope you managed to catch your breath with, the cryptocurrencies dancing, yields, dollar, everything going all over the place, right?
Oh, yes, it is. And, with the commodity prices clearly have reacted in a big way to Trump victory. Expectations of fiscal spending, tax cuts, concerns on trade tariffs on China, sanctions on Iran, Venezuela are perhaps all on the list. So that it is reacting on. And I want to talk about metals because we've seen a very sharp overnight decline here. You had the steel prices falling to 8-week lows, zinc to 6-week lows, to month lows. Asia right now clearly has seen a bit of a rebound, and that's ahead of the US Fed meeting today and the expectation that after everything is done, China tomorrow could be coming out with a stimulus measure. So that hope really is keeping the prices up. But what is not doing well at all is the gold and silver prices. Gold fell 3% overnight, silver 5%. Uncertainty is out of the markets, and that safe haven trade perhaps seems to be unwinding. And precious metal prices in the Asian markets right now also have seen further declines continuing.
All right, Manisha, thank you very much for that. So that's commodities and what happened last night and what's happening right now. We'll take a break. We're going to come back. Deepan Mehta, Elixir Equities, will be with us. Rajiv Agarwal of Doordarshi India Fund will also join in for some specific stock talk. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Well, let's get in our guest this morning. We have Deepan Mehta, Director at Elixir Equities, as well as Rajiv Agarwal, Managing Partner and Fund Manager at Doordarshi India Fund. Good morning, gentlemen, and thanks a lot for joining in. Well, Deepan, you go first. I wanted to get this out of the way because there are a lot of metal companies that have delivered their numbers. And global cues as well are a little bit muddled, because you have a stronger dollar index. You're hoping that China comes out with some stimulus. But we had Tata Steel as well as JSPL's numbers that were fairly good, while Hindalco's, Novelis's numbers were disappointing. Your quick take on that.
Nigel, good morning and thank you for having me on your show. I think there's a lot of uncertainty around metals, and now that we have Trump in the White House, it's going to cause even more uncertainty in the global markets, especially commodities. So I would just stay away from all metal stocks at this point of time. There's a lot of volatility in their earnings as well. And it's not that valuations are so attractive that you could, that they're discounting for any such volatility in earnings. Historically, they are trading significantly higher than historical valuation multiples. So from my point of view, all metal stocks and commodities are an avoid.
Okay, all right. So be a little careful on metals and commodities. That's the call coming in from Deepan. Hi, gentlemen. Good morning. Rajiv, great to have you on the show as well. So what do you think of this whole Trump trade that's going on? And I think what we're trying to understand here for us in India is that what does this do beyond the headlines? Any meaningful impact in terms of flows, you think?
In the preview of Trump trade, luckily in his first administration, and I think one thing we can be all sure of is there will be a lot more volatility that one should expect once he is in office. In terms of the trade flows or the flow of money, I think India clearly is one of the stronger economies, and one challenge that the Indian stock market has had in the last few weeks, months, is the money moving back to China or taking out from India and moving to China. And possibly there could be some reversal there as Trump is known to be very strong on the tariff. So it remains to be seen if that actually reverses for India, and that is a benefit for the Indian markets.
Deepan, what is the one, we're all market animals, and you don't do anything, but if you wanted to take a thought trade or a real trade, I don't know, based on Trump sweeping America, what would it be? I mean, like a real or a thought one, doesn't matter, but what would it be?
I think I'd go with software companies, mid-cap software companies, definitely. And our preference list, it's the outperforming ones like Persistent Systems, KPIT to an extent, Coforge. And now, again, with usual disclosure that we and our clients invest in these stocks, I thought Mastech's numbers were very good. And this time, Mastech growth has come largely from the US market as well. So, I mean, I would add to one of our outperforming stocks. But that one trade has to be, I think, my opinion, software companies.
Rajiv, same question to you.
Yeah, so I think for us, we will focus much more on the Indian domestic plays. And one area where I think there is a lot of value still is in banking and finance, especially because they have not done well. I know I've been on your show multiple times talking about banking and finance. The other one that I will point out would be capital markets. So I think those two plays, which are much more domestic to India, are very strong in our mind.
What about oil, gentlemen, Deepan? I thought more directly correlated to what his policy pronouncements have been. Drill more, get more oil out of the ground from the US, generally should put a lid on oil prices. Are there any sort of direct plays here? Some have been talking about, these refining stocks which are down 50-60% from their highs, oil marketing companies. Any thoughts at all?
No, Prashant, I think oil as a fear factor is gradually reducing in our markets, has been so for the past several quarters or so. And lower oil prices, of course, beneficial for the economy as a whole, help better inflation management, may lead to lower interest rates sometime in the future. But look, we've seen high oil prices, low oil prices for the last several decades. But look at the returns which the oil marketing companies have given. So I would just generally avoid it. When it comes to Reliance, I think whatever gains we have seen in the last 3-4 years, they have come more from the non-oil, the non-C2C businesses. So just because we have a change of guard in the US, I don't think that creates any inflection point or trigger for buying oil stocks. But yeah, lower oil prices will certainly benefit another favorite company of ours, usual disclosure, that is Indigo. And that's something, which one can consider if you feel that oil prices are going to be lower over the next few years.
Okay, Indigo, that would be a pick. Interesting. Rajiv, I remember our last conversation. Like you said, BFSI is something that you've liked a lot in the past. And I remember we spoke about Manappuram, some of these gold financiers. I think you were studying them at that point in time. I don't know if you went ahead and bought the stock after that or not, because from a regulatory standpoint, it's been a slam dunk, right, with what happened with Asirvad. So I don't know, what's your view now on gold financiers? And if you can tell us about Manappuram in light of the Asirvad issues.
Sure. Yeah, so I think Manappuram obviously has been hit hard after they had a restriction on disbursing loans for Asirvad. And I think that is an issue that will definitely be impacting the stock in the short run. I think they recently came out with the Q2 results. That was pretty reasonable. But I think some of the pain might still be further ahead, because as the book runs down and if they're not able to disburse the loans over the next few months, then they will start seeing a bigger pain there. So what are we doing? I think we own the stock. So that's the usual disclaimers. We are biased. And what we are doing is basically, if we find good valuation, we would be possibly buyers, because what we are thinking of is thinking from a long-term perspective. So I think in the next few quarters, possibly it will be a pain trade, but it can then reverse and be a good trade after that.
All right, Rajiv, I wanted your view on this. Overnight you had green energy stocks that took a hard hit. Trump is saying drill, baby, drill. So, you had the solar-related names that sold off big time. In India, we have a few listed companies. The hope was that, modules as well as cells could be exported. What's your view on this theme?
I think I do feel that Trump obviously is not a big proponent of renewable energy. But renewable energy still has become so competitive from a price perspective that more and more companies are interested in having renewable energy. So I think from a solar module perspective, clearly we had a company recently come out with an IPO, very successful IPO. So I think there is a possibility that they are able to export more of their solar panels in case there are bigger tariffs on China. At least that is what they're positioning themselves for, and that is a possibility. We are not that big on solar, just for to clarify to your audience. We are much more on the wind side right now, because we think in the solar there are a lot of players out there.
Okay, all right. Rajiv, great chat as always. Thank you very much for joining us. Deepan, request you to stay with us. Coming back to you for more. Anuj is here with what he's making of the setup. Anuj, good morning.
Morning, Prashant. We had a big party yesterday. The big question is, will we have a bit of a hangover? The one risk that the market has is a classical 20-day exponential moving average halt. Yesterday's high on the Nifty was exactly that level, the 20-day exponential moving average. I don't know what the FIs actually sold aggressively once again in the rally. And they sold in futures also, while clients bought. And FIs are short and clients are long. Now, I just want to show this table. After a long time, I'm looking at this table because this is 4.6 lakh long for clients and 2.33 lakh shorts. This essentially is the same space where you have the SEBI record of 90% traders losing money. FIs are short, of course, so that's something to keep an eye on. Now coming to levels then on the Nifty, the first support is 24,366, the 10-day exponential moving average, and then yesterday's low of 24,204. On the upside, the first resistance once again comes in at 24,525 to 24,575, which was yesterday's high, and also the 20-day exponential moving average, and then 24,650 to 24,800, which is the 50-day exponential moving average, and the call writer zone. Remember, today is also the weekly options expiry on the Nifty. On the Bank Nifty, it traded in a very narrow band yesterday after outperforming for better part of last 1 month, and that's because IT really took over, and the banks really just had to consolidate a bit. The range here, 52,200 to 52,500, and then a slightly bigger range if you want, 52,000 to 52,800.
All right, Anuj, thank you very much for that. So that's a quick look at the market once again. We'll take a quick commercial break here. We're going to come back. There's 10 minutes to go for the pre-open session. Mitesh Thakkar and Sudarshan Sukhani will also join us. And we'll turn our gaze to the technical side of things. Some trades coming up for you as well. Stay with us.
Welcome back. Well, as promised, let's get straight to our technical experts. Mitesh Thakkar and Sudarshan Sukhani join us on the show. Good morning, gentlemen. Mitesh, you go first. There's been a bit of a party in the last couple of sessions. Do you think we've overextended ourselves on the upside, or do you believe that today's dip needs to get bought into?
Good morning, Nigel. My initial belief is that the dip can be bought into. We are possibly looking at 100, 120 point kind of a cut. And while 24,500 was an important pivot, and we had advised taking part profits over there, the hourly and the 2 hourly charts still show strength on the upside, and this pullback could extend. And typically pullbacks are volatile. So we have had about 1.5 days, about 9-10 hours of non-stop rally on the hourly charts, and I think a pull off is a good idea to possibly add on to long positions. My preferred buying zone is around 24,300, 330. So I think, in case we get, after the gap down, if we get another 40-50 points on the downside, I think that will be an area where I would want to explore long positions. And 24,500 remains the first pivot. But I think once we cross that, good chance that we might test 24,750 area.
Okay, all right, got that, Mitesh. Let's go across to Sudarshan as well. Sudarshan, morning. What's your view? Are you playing on the long side?
Hi, good morning. I think we have changed our trend now. But for the last 1 month, we were in a correction of some kind. Remember, this is not a V-shaped recovery. The market was getting stable around that 23,800, 900 zone for the last 5-6 days. So apparently it fell, it's made a small base, and from there the rally has started. Yesterday was a bigger rally, that's a different point. But the fact remains that we were already building a base before this event. So my view is that we are now turning into an uptrend. If we are in an uptrend or almost there, then the trade is very simple. Every dip is a buying opportunity. And that applies to the Bank Nifty, but much more important, it applies to the Nifty. Then we have this seasonally, bullish period from November to December. That's something that always generally is upbeat. So we have a base, we have a breakout from a base, we have an uptrend in the offing and a seasonally bullish period. All said and done, be a buyer on every dip.
Okay, be a buyer on every dip. That's saying it very, very clearly. Mitesh, morning. Let's also get to stocks. What are your trades today?
Good morning. So on the stock side, I have a mix of buy and sell calls, more on the buy side. Birla Software is a buy with a stop at 568, 567, and look for a target of 610 here. L&T is a conditional buy. If it starts getting past 3660, take a stop at 3630, look for a target of around 3725, and a buy on Chambal Fertilizers with a disclaimer that I have positions over here which are on the call option side, so there's a bullish bias involved and hence vested interest. Chambal is a buy with a stop at 494 for targets of 525, and one sell call that's on ICICI Prudential. Keep a stop at 724, look for targets of around 695.
Got that. Sudarshan, what about you? What are your picks?
Well, it's primarily mid caps, one large cap, that is TCS. Consider buying it with a stop under 39.75. Glenmark, which has already been in a very strong uptrend, was building a small trading range. It's likely to break on the upside. Buy it with a stop under 17.20. PI Industries is a buy, stop under 45.50. And finally, Atul, which has been in an uptrend, a small consolidation is likely again to break on the upside. Atul is a buy with a stop under 78.25. One more point, but if I say the markets are going to go up and the trend is up, then that doesn't mean that relentlessly every minute, every hour the Nifty goes up. It pauses, it corrects, but the broader trend is up, and I think viewers understand that point very well.
Absolutely, and that's a point well worth making again and again. Thank you very much, Sudarshan, Mitesh. Appreciate you joining us with that perspective, that setup, and of course individual trades as well. We'll take a quick commercial break here. We're going to come back with a pre-open session. We'll also have the management of Sonata Software to talk about their second quarter earnings. Stay tuned. Coming up. Okay, welcome back. You got about 15 seconds to go as far as the pre-open session. Sorry, beg your pardon.
The actual open.
The actual open. No, I said I was referring to the pre-open session, which is also, I think, not. I think it's 14 seconds away, and the market open is 14 minutes away. All right, I think Deepan is still with us. And I think we'll have, the trades start to come up, and we'll see if there is any momentum, there is any lift today, or it's going to be a slightly lower start. Deepan, talk to us a little bit about, Rajiv earlier was talking about financials, etc. Anything in that space is looking attractive to you? And let me point you to the space which is, or the segment which is beaten down the most, MFI. And let me point you to the one stock which is also beaten down quite a bit within that space, Credit Access. 50% off the lows, off the highs. Valuations have come off significantly. Arguably, it's the highest quality management in that space. I don't know if you've given it a look, or do you already own it in the portfolio?
Yes.
Go on.
Yeah, Prashant, we own it in the portfolio and haven't sold. What I've come to realize is that when it comes to MFIs and credit card companies, you need to have a really strong stomach and very strong appetite for risk to buy into these companies. Even our conviction is being tested at this point of time, whether the sector really has a kind of a long-term potential. Let's see, for the time being, we are not throwing in the towel. We are just remaining invested. And hopefully this is a temporary aberration. And once these issues are over and done with, and provisioning does come down and they go back to expanding the loan book, we will see earnings coming back very strong. The only reason why we have this belief is that in the past, companies like Spandana, Spurti, and other MFI companies have always come back stronger and created new highs, not only in terms of stock price, but also in terms of profitability. The intrinsic return on equity on a long-term basis is extremely attractive. So let's just wait and watch. I think there's going to be volatility. It's part and parcel of investing in equities, a little bit more in this segment. But there's no denying the fact that it's a high growth segment within the entire banking sector. So I would remain invested.
Okay. All right. Just hang on, because we have the MSCI announcements to go over as well, Deepan. So we'll just come back in a second. We have Vivek joining in. MSCI announced results of its November review, and it will be adding 5 Indian stocks to its global emerging market index. Vivek is here with all the names and the details. Vivek. And you're the birthday boy, so happy birthday first.
Thank you so much for that. Well, that's right. So MSCI has announced the results of the November index review. Now, into the MSCI Global Standard Index, there are 5 additions, like you mentioned. Most of them are largely along expected lines, something that we flagged off at the start of the week as well. Voltas will be coming into the index. As per IIFL Alt Research, the flow estimates are close to $280 million. BSE, Alchem, Oberoi Realty, as well as Kalyan Jewellers, all of these stocks enter the MSCI Global Standard Index. Remember, this is the index in which there is maximum liquidity, and maximum ETFs tracks this particular index. Along with that, the second tranche of the weight increase in HDFC Bank after the HDFC Bank merger will also happen in this particular index review. So close to $1.7 billion of inflows is what HDFC Bank will receive. So totally, India is expected to receive close to $2.5 billion of inflows, and India's weightage in the MSCI EM index now goes up to almost 19.8%. When you're talking about the MSCI India Small Cap Index, 13 additions and 7 deletions over there. One stock that missed out this particular time is Adani Energy Solutions. MSCI is awaiting further clarity on the free float on that particular name. So overall, a net inflow event, and India's weightage increases to 19.8%.
Okay, 19.8%, inching to the 20% mark on that important EM index. Got it, Vivek. Thank you very much for that. Let's quickly look at the IT space now. The first company on our radar is Sonata Software. Now, we're looking at, of course, second quarter performance as well. Revenue was down about 14%. The margin managed to expand. To talk about this and to talk about the bigger picture, what happens to IT companies which are exposed to the US now in the Trump 2.0 era? Sameer Dhir, Managing Director and Chief Executive Officer at Sonata Software, is with us. Sameer, great to have you on. And actually, I want to start with that question first, and then we'll come to your numbers. Because there's already a lot of chatter around how more protectionist will US policies be with respect to things like H-1B visa. Tell us, what is your exposure? I mean, in terms of just the workforce, how many H-1B visas do you typically in a year do you require? And is there any fear that you would have in terms of business disruption or any kind of a break in continuity with the new stance in the US?
Yeah, so morning. So first of all, I think our exposure is rather limited from a US H-1B perspective because we do a lot of local hiring. To the extent of this fiscal year, I think our plans were baked in earlier this year. So we are taken care of for the current fiscal year and maybe early part of next fiscal as well. But it's an evolving situation. I think we'll have to see how the new policies shape up with, like you said, Trump 2.0. And we'll see how that whole situation evolves, and then we'll adapt accordingly. But from an overall business perspective, from a Sonata perspective, the exposure is not extremely high for us.
And what is the percentage for the US business right now as part of the overall pie? And let's actually start there when we anyway had to talk about numbers as well. Just tell us how the US business right now is shaping up and whether you're expecting any boost because sentiment right now in the US seems to be absolutely at peak.
Yeah, so I think there's clearly a duality in the market right now, and you have to parse it by industries to really get a meaningful understanding of what the market is. So on one hand, you have momentum coming back in the BFSI space, which is, I think, very heartening because that's a large part of the IT services spend. So you definitely see an uptick coming there. Not in a significant way, but definitely green shoots are visible. The conversations are much more around modernization. The conversation is much more around adopting newer technologies to evolve their consumer experience, which I think is very heartening. On the same token, the healthcare industry is definitely cutting costs, which I think bodes well for IT industry generally, because the adoption of technology and healthcare isn't the most technology evolved sector even now. So I think there's more opportunities for companies like us to really gain market share. So that's sort of one end of the spectrum, banking and healthcare, which is doing well, exceptionally well for industry in general and for us specifically. But on the other hand, the retail sector, given the inflationary movements are still very visible. And I think even after the results yesterday, the markets are signaling that inflation will continue to be rigid. So I think the retail and manufacturing sector is really still watching and waiting. And that's why we're seeing the pressure. So there's a little duality, healthcare and banking doing rather well, retail and manufacturing being under the pressure.
Just a very slightly technical question in that sense. Sameer, hi, good morning. The rupee here is making fresh lows against the dollar. Does that give you any boost, just translation-wise?
Yeah, it has again a double impact. It has an impact on the top line as well as the bottom line, but nothing significant, at least at this point in time. Like I said, it's an evolving situation. We're watching much like any other industry peer right now. But nothing that concerns us or is an upbeat momentum as well. I think the pre-election rhetoric is behind us. I think we'll have to watch now as to how the new administration, as they sort of take power, as to what big decision they will make now. I think it's a very evolving situation.
All right. Hi, Sameer. Good morning. This is Nigel on this side. Earlier you had guided that the second half of the year will be much better than the first half. Is that on course? And also in quarter 2, you were planning for a wage hike for the junior management. And quarter 3 will be for the middle managers as well as the senior managers. Could you tell us what was the impact on the wage hike in the second quarter? How much is expected in quarter 3? And in that sense, what will the exit margins be like?
Sure. The multiple questions, let me parse it out. So I think number one, as we sort of guided at the beginning of the year, if you recall, we had a tough quarter Q4, but we guided that we'll grow between 1 to 3% in first half of the year. I think we're coming around 1.9%, almost around midpoint of our guidance, which I think is what we expected. And as we guided, our second half will be better than the first half. We are pretty much still holding the position. We believe that our second half is going to be better than first half, which I think is what we had expected. So very much in line. And the second dimension of that is very much in line where we expected the growth to come. The growth is coming from banking, the growth is coming from healthcare, and we continue to see pressure in the retail and manufacturing side. But despite the headwinds in the retail and manufacturing side, given the large deals that we have closed out, given the wins that we had in the data modernization space, I think the overall, we're still holding up to our estimations that we talked about. The second part of your question about the wage hike, I think, yes, we have executed in this market also the wage hike for the junior management people effective July. We went through with that whole process. That had an impact of about 1.1 or 1.2% on our profitability in the quarter. And we are going ahead with the plans for the wage hikes for our middle management and senior management in the coming weeks and months. I think that's moving ahead as per the plan. As you know, we're building from a long-term perspective, and not only the wage hikes, we have also kept our commitment for the fresher hiring that we anticipated in the course of the quarter. So even in the last quarter, we concluded, we onboarded about 150 college graduates, much in line with our plans. So we have not changed our strategy based on the market volatility that we are experiencing, because it's part of our broader game plan that we are executing to.
Samir, this is not a Sonata question, or maybe not even an IT services question, but I just wanted to ask you this since we have you. So when we talk about implications of a sort of a Trump presidency, we look at, say, the H-1B question for IT services, etc. And that's been true for the last 15, 20 years, right? I mean, visa policies in the US directly impact IT services companies. But, over the last 4 or 5 years, GCCs have become very big in terms of everything, in terms of exports out of the country, not as large as IT services yet, but, employment, very good opportunities for people here. Do you see any risk at all to that build out, GCCs? It's a slightly maybe far out question, but wanted your thoughts.
I'll give you, I don't know what the industry answer to that, okay, candidly, but I'll tell you what the Sonata answer to that, which I think we are very clear about. So we see GCCs as a great collaboration vehicle for our client base. And why is that? Because most of the clients for Sonata are in the enterprise and the SMB space. And for these customers, they're very clear what they want to do in-house from a GCC perspective versus things that they don't want to do in-house. And they really look at partners like us to help them from a GCC perspective, but also from a broader modernization agenda perspective. So do we see that evolution coming up? I think it's absolutely coming up. It's very visible to us. But for the mid-size customers of ours, which did not have earlier GCCs, they are actively talking to us about helping set up GCC for them, which I think is a very positive step for companies like us. So it's very much a collaborative space. And given the evolution of technology now, I think it bodes well, because then you can have a deeper collaboration in the same time zone, even in India, from our team members as well as.
But you don't see any reversal to that, or that going slow, because the build out has been fantastic. You see that as a trend which will continue.
Absolutely.
More and more GCCs here in India.
More and GCCs, probably smaller and more GCCs. So gone are the days of larger GCCs. I think those enterprise clients have already set up, but we do expect the mid-tier customers setting their own GCCs as well.
All right. I think we've got about 3 minutes to market open. Samir, thank you very much for joining us. Appreciate it. We can quickly run through the trades, 9-10 trades. Mitesh, you want to take us through what you have?
I'll go with a buy on Chambal, and as I mentioned earlier, I have positions over there, so there's vested interest. I believe the numbers are also good and the trend signs are very strong. So I think this stock should head towards 520, 525 very soon.
Sudarshan, what about you?
I consider buying Glenmark with a stop under 1720.
Okay, Chambal and Glenmark. These are two 9-10 trades coming in from Mitesh and Sudarshan, respectively. Let's now look at go across to Vamakshi, who's now standing by with I think CG Power is the stock in focus. Vamakshi, take it away.
Well, absolutely. There's actually a whole host of stocks that are in focus. There's a note that has come in from Nomura on the T&D sector. They say that India's power transmission sector is poised for significant growth. In fact, the Central Electricity Authority expects $110 billion worth of investments over FY22 to 32. Globally, regions such as Europe, North America, as well as MENA are also investing in transmission infrastructure. And in order to capitalize on this significant opportunity, they prefer, product companies. They've thereby gone ahead and initiated coverage on CG Power with a buy call target price of 970. They're expecting earnings CAGR of 32% from FY24 to 27, and they believe that the company is strategically positioned to leverage industry tailwinds. Apart from that, they've also gone ahead and initiated coverage on GE Vernova T&D with a buy call target price of 2,500. Out here, they're expecting earnings CAGR of 76% over the next 3 years, and they believe that this will largely be driven by ordering prospects, market share gains, as well as healthy pricing power. And lastly, they've initiated coverage on APAR Industries with a buy call target price of 11,700, and they say that this company is a proxy play on grid electrification as it specializes in highly tech-oriented products. So overall, they're quite bullish on the T&D space in India.
All right, transmission and distribution, APAR and CG Power, two names which they mentioned. Vamakshi, thanks very much. I think a couple of seconds to go for market open, and is looking much better than what the GIFT Nifty at 8 o'clock indicated. I think the pre-open is absolutely flat. The Nifty is up about 5-6 points or so. We'll see. I mean, I think maybe one round of some pressure coming through, and that would be natural and to be expected, and then we'll pick up from there. So the start is, I saw some green and almost immediately down 0.15, 0.2% lower, 24,420, 430. Nifty Bank is starting about 0.1% lower, 52,245. You got the sensex up down 0.25%. Mid-cap index is up 0.25% at this point in time. 20 stocks are higher, 30 stocks are lower. That's a Nifty heat map which is coming through. So yes, there is about a 50-60 odd point pressure. That's about 0.25% on the Nifty to begin with. Let's get to individual movers. Surbi.
I was actually looking at CG Power, the stock that Vamakshi was just talking about on that Nomura view. It's open positive, 2.5% up. But anyway, for the broader market, the color indeed is red, 50 points down. So not a big cut, but yes, there's pressure. Hindalco, straight away, like Nigel told us, the commentary from Novelis and this downward revision in the guidance, that is, I think, not being taken too well by the street. Adani Enterprises, BPCL, SBI Life, HDFC Life, these are the early movers on the way down. Let's watch for the big boys, the heavyweights. Reliance, ICICI Bank, these are stocks that have opened negative. Let's see how they do. L&T is also lower. So the trio is putting a fair amount of pressure on the indexes, at least as we start off. A lot of consumer names continue to drag. Tata Consumer, Nestle, Trent ahead of numbers today, all on the way down. Asian Paints is also lower. So consumers pretty weak. Hindalco has a company-specific issue going on. And then you have some of the big boys dragging their feet. On the upside, however, you will hear from this company very soon on the show. Apollo Hospitals, splendid quarter, good numbers, and 6%. That stock's roaring away. Tata Steel, again, Nigel got it bang on because he was telling us that the operational performance of the company is really good, especially the India business. The EBITDA per ton is above estimates, and the market's saluting that, 1.5% up on that stock. And then some of the tech plays continuing from yesterday. Tech Mahindra, HCL Tech, TCS, Wipro. So some of the tech trends are intact, and that's preventing a wider fall on the Nifty. But let's see, it's a nice tussle between the bulls and the bears on the large cap screen.
Well, that's right. The biggest losers, Hindalco, not so much because of the past quarter's numbers, but because now they're not sounding very, very optimistic on the guidance from here on, and that's why they pulled it back. So that's why that stock is getting slammed down closer around 6%. There are a couple of names that are doing very, very well. Avalon Tech, pull up that stock, flying away in today's trading session. Good set of numbers is what we saw. The operating profit was much better than what the street was working with, and that explains why that stock is now up closer to around 15% as we speak. The one that's taking the hard knock is Adani Energy. That's because of the MSCI announcement that came overnight. Adani Energy did not make the cut. The reason that was cited by MSCI is that, in fact, low confidence about the stock's free float. So that's why that's pulled back closer around 7%. CG Power, Vamakshi just told us about. You have Nomura note. Well, the stock is clearly enthused by that. JK Lakshmi Cement is down closer around 1.5%. The stock has already corrected 20%, but those numbers were quite weak. Esther Industries is a stock that we don't talk about very often. That one has got very high volumes, and it's up close to around 8-9%. So I don't know what's gone on there. So keep an eye out on that one. On the flip side, You have Jyoti Structures, the stock that was, I think, 10 rupees maybe 18, 20 months ago. It moved all the way to around 40 rupees, but there is margin compression in the numbers and they ain't impressive. The top line growth is there, but profitability is not coming about. So that stock's down close to around 5%. Delta Corp as well, one of the top volume buzzers on the downside in today's trading session. So the start is in the red, but I think the broader market's holding up. That's something that the bulls will latch on to.
Absolutely, and I think how you feel about the portfolio depends on the broader market more than just what's happening with large caps. So I think that's a point well worth making. We'll have I just want to take a quick look at a few other names, and we'll bring in our market master of today. You've got KRN, I think Heat Exchangers, a 7% pop there, 580. I don't usually see that name at the top of the volume board, but today 1 million shares already traded. It's the third largest volume mover on the market. I think you mentioned Avalon, Nigel, 15%. Avalon has got humongous volumes, 680 on Avalon. That's an EMS play, 17% now. So that's going one way. I mean, actually, yesterday the EMS plays all did very well. So Dixon, there was Sirma, Keynes, they all were up between 10 and 15%. And we should, and Avalon was not, maybe there's just sort of a catch up, but Dixon, Sirma and Keynes, big moves yesterday, and they're starting kind of flattish. But this one is the clear large mover. What else? Endurance is up about 4%, 24.75 on Endurance. There is NetWeb, which is up about 2.25% at this point. Of course, I mean, the biggest volume-led gainer remains Apollo Hospitals with a 5.5% pop. So that's looking very, very good. You'll hear from the management a little later. Vari, which hit 1 lakh crores on market cap briefly day before yesterday and firmly yesterday. It's down 5%, so 34.52 on Vari, and that is the number one volume traded loser at this point. Number two is Hindalco with that 5% cut. And I think, as Nigel mentioned, 8% on Adani Energy. Lots of expectations that MSCI inclusion for now is not come. So keep an eye. Nalco is down 1/3%, but it's done so well recently. Premier Energy, big move yesterday. It's down about 3.5% at this stage. There is Afcon's recent listing, 3% cut. It's got volumes behind it. Delta Corp is down 2%, and so on and so forth. So, that's the market open. Broader market breadth is 2:1 in favor of advances for now. We've got Gautam Chachoria. He's head of global markets India and at UBS. Gautam, good morning. Great to have you with us here. Thanks for your time. It's been a while, Prashant, this side. What's the team at UBS making? I mean, of the Trump victory and the implications here in India. If you've got a first cut out, I mean, just cross-asset, across, equities, what happens to currency here, and the overall sense. Go on.
Morning, Prashant, and good to be back with you. Look, the first cut is a red sweep was at the margin of surprise. I think a Trump victory was being talked about in the markets for a while, but the extent of the victory was a surprise. Our initial take from the broader global macro desk is a lot of the trade reaction yesterday across markets, across asset classes, have kind of getting there to price in the big red sweep, so to say. So look, what happens from here on after the initial market reaction will depend on what Mr. Trump actually goes and says about his policy measures going ahead. But markets were paired for a Trump win, but the red sweep was a surprise. And the big moves have already happened possibly.
Gautam, hi, great to have you on. Now, correct me if I'm wrong, but I think you have had, UBS has had a house call which is a little more conservative, a little more cautious on India, even before the correction had set in. But now the market has cooled off about 9% from the peak. So what's the sense? Earlier on the show, we were talking to Hartmut Issel, and he said that perhaps, over the next 12 months, earnings could start looking better in India. But you tell us, what's your view? How do you read this quarter? And will the slowdown in earnings last?
Yeah, the cautious view on India was relative to emerging markets in general, not an absolute call necessarily. And that relative call was also linked to slower growth, slower earnings growth in India versus the rest of EM and versus what the markets were pricing in, so valuations. But I think what's led to finally markets correcting in India also has been a weaker earnings season. Look, there has been discussion about this quarter being weak in terms of growth, earnings in a broad way. But the actual earnings were even worse than what the markets were prepared for. And that's kind of driven the correction which we have seen. The cash, from a technical perspective, we have seen cash being deployed with local funds, but they're still sitting on a large amount of cash. The global benchmarked investors would have possibly reacted as India's weight came down. It's a circular thing. Based on market movements, the weights in index change. China's weightage in index went up, India's went down. So there have been some adjustment around that. Now, look, the big picture for us, for Indian markets here, again, the Trump thing is done. What Trump policies are, both for China, for global, and for India, will matter. But I think more than all that, what will matter is the policy stance locally. Will RBI respond to slowing growth? Will we finally see some policy action from the central government, which we haven't seen till now? Or will we even see some positive surprise on the reforms agenda post all the state elections are done? So those are the things we think will be bigger drivers of the local market in India beyond what's happening globally.
But just to talk about that statement, you just made a statement saying need to see if the RBI responds on slowing local growth. So let me just focus on the slowing local growth. You really think that the economy is going into a bit of a slower grind? It's a notch lower. And, again, I just go back to that earnings question. So the second quarter, the sluggishness that we've seen, are you expecting this to last? I mean, so how do you put the earnings projections now for, say, the next 12 months, this year and the next?
So we do think the earnings will recover. I think second quarter possibly was a low in the short-term short-term cycle. But obviously policy support will also matter. What happens to RBI's broader liquidity stance beyond the rate cycle stance? What happens to the fiscal stance from the central government? They will also matter. So I think the base case is we'll see some gradual loosening. The rate cut debate is out there, but again, there's broad consensus rate cuts will happen in the next 6 to 9 months. So that should support from a top-down perspective as well as bottom-up. We have seen signs of pickup in rural already, as has been talked about. So earnings growth should pick up from here. But is it enough to drive markets up, given where the valuations are despite the market correction? That's a debate. And for that to happen, I think you will possibly need more positive surprise or possibly a further sharper, bigger loosening or reforms agenda. And also, look, from our perspective, we also have a big India conference next week, and these are one of the debates which we'll try to get into next week with a lot of experts and investors at that event.
All right. Hi, Gautam. Good morning. Nigel on this side, and good to see you, Ben. What about positioning? I recall a few months ago when we chatted, you were talking about maybe a probable shift from industrials to consumption, taking a bigger chunk of consumption. How are you all right now in terms of positioning? Going by the corporate commentary, we have seen some of these industrial-related themes as well come off a little bit. So how are you positioned?
Yeah. So look, industrials, we have been downgrading individual stocks, reflecting both valuations as well as specific companies' order book momentum. So we have been downgrading there. It's not tough to take a broader sector-level view because that's the sector where we see much more leverage to any policy easing if we see one. Consumption is a tricky one. It's a sector which benefits from any rural recovery which has been happening, and that's kind of being priced in many of the stocks, possibly. But also in a market where investors get worried, it's also a defensive, right? That's the place you hide. So consumption is always, you have to look in that perspective. And from our perspective, the way to reflect that in our positioning is still underweight consumer discretionary, automobiles, staples, stay neutral.
Okay, so all things put together, Gautam, to sum up the view, and we get the sense of caution. And I know what you're saying is that a lot will hinge on the policy decisions here in India. But all things put together, over the next, say, 6 months to 12 months, are you expecting the market to continue to consolidate? Any broad band that you could leave us with, consolidation or 5% upside, downside, any projections?
I won't give a single number, but the way to qualitatively put it that is in the next 2-3 months, further consolidation is likely. But post that, there should be enough base and support, both from a valuation, earnings, and policy. And that's the base case for us, from where market can go up.
Okay.
All right, Gautam, we'll leave it on that note then for this morning. Thank you very much for joining in and giving us that view. That's the UBS call coming in on India, saying that apart from, of course, the Trump trade, the tariff issues, and all of the policy actions that will unfold in the coming weeks in the US, it's local policy action that will continue to be perhaps a bigger driver for the market here. Market, which for the time being is actually, the cut's a little deeper, 125 points now.
You know, Policy Bazaar is a name I would just want to mention. It's up 5%, and it's got, for this point in the day, decent-sized volumes. You know, ever since they announced that hospital, that managed healthcare sort of kind of unit which they want to set up, and market slammed the stock from highs of 1900, it's been in a range, and as we speak, I mean, it's trying to get out of that range. So it's been in that range since the 25th of September. Let's see. But that's a big move coming in on a fairly large stock now, guys.
Well, that's right. Let's move on then. Max Healthcare, they reported their Q2 numbers. Revenues grew ahead of estimates, while margins missed estimates and contracted by close to 200 basis points on a year-on-year basis. My colleague Vinny spoke to Abhay Soy, the chairman and managing director of Max Healthcare, and began by asking him about the growth rate in the existing and the new units for the second half of the year. Let's hear out what he had to say.
So I think the two aspects. One is from ARPOB standpoint, typically the second quarter is the stronger quarter with respect to occupancy, but typically a weaker quarter in terms of ARPOB. So you usually have, because you have more medical, you have more sort of seasonal flu patients and seasonal diseases admissions, more medical admissions, which enjoy lower ARPOB. But so you need to compare it with the same time last year. Having said that, we've also had two new hospitals which have been added, this year, which was the Nagpur hospital. It enjoys a lower ARPOB than our overall ARPOB levels, and so does Lucknow, the new addition. So, we will see growth in these ARPOBs as we go along. But having said that, in the current quarter, they would have marginally dragged the ARPOB down.
Okay, so by the end of the year, if you're watching out for in Q4 FY25, what should be the ARPOB number that we would be looking at?
So, I normally stay away from giving forward-looking guidances. But having said that, our ARPOBs are growing at about 8 to 9% with respect to the older hospitals. With respect to apples, newer hospitals also, they're growing at a significantly higher pace in double digits. When we look at acquisitions, we look at return on capital. You could look at smaller cities with lesser ARPOB, but so long as your return on capital employed is 20 to 25%, that's what we seek. We appreciate and we focus on that rather than what the overall ARPOB is. I think what does matter is what is happening to your overall EBITDA in value terms, and that is moving up, and that's moved up quite. Moved up by about 19%, year on year.
Sure. Then, like you were mentioning, the EBITDA per bed also, that has seen a good growth when you compare it on a sequential basis. Why obviously a bit flattish, but I just want to understand a bit more in terms of the scale up for EBITDA per bed for the newer units. What are we expecting there, and how do we see that moving?
So again, the big difference between year-on-year basis, that's last time, same time last year, did not have the three hospitals. One is the acquisition of Lucknow, did not have the Nagpur hospital, and did not have the brand new Dwarka hospital, which is, of course, in the first 3 months, it got launched in July. First 3 months on schedule, it is supposed to, and it did have an operating loss. So all these three things, drag down the EBITDA per bed on an overall basis. But having said that, if I look at it on like-to-like basis, I think they've been very encouraging sort of double-digit growth in EBITDA per bed.
Okay, like for like, double-digit growth in EBITDA per bed. So that's an interesting point coming out there. What about your occupancy? Good number, right? 81%. I don't think I've seen it anywhere most of the times in the sector when you look at it. But 81% good number, 91% coming in for Nagpur, which is a newer unit. What is it that we are watching out for in terms of occupancy going forward? Especially one for the newer units, something like a Nagpur, 91%. I don't believe that is something that would be sustainable. And what would be the peak occupancy also for your existing units?
So I think, if you asked me this question a couple of years ago, I would have said 75, 76%, but we've learned to sort of operate at 80, 81%. Having said that, this is also, like I mentioned, seasonally a strong quarter. So like for like, I think last year it was 78 or 79%, which has gone up to 81%. Yes, the encouraging part is that it includes the 2 new hospitals of Nagpur, where, same time last year, the occupancy was 60-odd%. This year, under our hands, has gone up to 91%. I think it went up to 70-odd% even in Lucknow. And as we see additional clinical teams, employment of new equipment and technology, getting better sort of marketing support, providing better marketing support to these enterprises, you will see the occupancy ramp up over here as well. And therefore we are looking at expansions in the very units that we've acquired. Nagpur is already operating at 91% occupancy. Yes, the percentage points may come down by a few when we move into quarter 3, simply because it seasonally won't be such a strong quarter. But having said that, we already are looking at setting up another 200 beds on top of the existing 200 beds over there. 81% is very high occupancy. We can't continually operate over there. Lucknow, again, we're looking at some expansions. Each one of our hospitals, we've been trying to work around this. In the coming month of April and May, we are looking at Mumbai, another 260 beds of brownfield come in place over there. Mohali, Punjab, again, operating at 87, 88% occupancy. We're looking at 200 beds coming in the month of April and May. We're looking at 400 beds in our main cluster in Saket. And then next December, we are looking at, which is FY26, we are looking at another 550 beds coming in Gurgaon. So hopefully all of this capacity will, we're already late on it in the sense that, I wish I had this new brownfield capacity come on stream a year and a half back. But nevertheless, it is much needed, and we are looking forward to these brownfield capacities come out in the next 12 months.
Okay, surely waiting for that. But just the number in terms of occupancy, then what would the sustainable level be overall for the company that we could watch out for, in the next couple of years?
Well, sustainable level is, about 80, 81% is as the high as you can get.
Yeah.
This is midnight occupancy, as you may appreciate. What that essentially means is that, at night when the admissions happen, the occupancy goes beyond 100% during the day.
Right.
Because, the ER admissions at night which happen, these are, like I mentioned, these are midnight occupancies that we talk about.
Sure. Okay, Abhay, I just want an update a bit in terms of the integration of the JPA assets and, the timeline, ramp up. What are the plans there? What are the margins that we are watching out from this asset?
It's too recent acquisition. We just acquired in the month of October. I think shortly we should be completing the call and put option and, moving from a 63% owner to 100% owner. It should happen in a matter of days right now. I think once that is done, we are in the process of already integrating the IT systems, augmenting clinical programs, implementing new employing new technology and so on. It is a marquee asset. It is over 18 acres of land. Very quickly, we will be operating 500 beds over there. We've already seen a ramp up in occupancy. I think we are very, very encouraged by what we are seeing over there and the fact that what we can do over there. We're already considering expanding that capacity in the years to come by another 400 to 500 beds. Given the marquee location, the access, and so on and so forth, I think we have no doubt we'll be able to sort of look. I think we've had great results with the two acquisitions we've done, and I don't feel that this one's going to play out any differently.
What about your Dwarka unit as well? Obviously fairly newer, July 2024, I think we started the operations over there at the company. Just a bit in terms of the losses or break-even point, when should we expect that? Because right now, yes, slight bit of a loss that you're seeing there for the Dwarka unit. What is the expectation?
So I think the encouraging part is that, look, we started the hospital in the month of July, end of July. So you can actually count it August. We've had about 18 crores of EBITDA losses. But I can tell you that this hospital, this greenfield, brand new hospital, will be the fastest break-even that we'll ever do. as far as the greenfield venture is concerned. So that is the way it's demonstrating. It's a very fast catch-up. We're just waiting for some of the empanelments and insurance tie-ups, etc., etc. I mean, it happens over 3 to 6 months when you start a new hospital because, by the time you finish your agreements and so on and so forth. But I think we are very, very encouraged. And like I said, this will certainly break even and be in the money before the end of the financial year. But I actually see this as being fastest break even in a greenfield that we've enjoyed. And, we've enjoyed some very, very fast break evens in the past.
All right, that was Vinny in conversation with Abhay Soy of Max Healthcare. It's a bit of a healthcare morning, actually, because in just a couple of minutes, we'll be talking with Apollo Hospitals as well. The stock's on a tear, by the way. Let's go back and bring Apollo on the screen. It's been the best performing stock on the Nifty this morning. And yeah, it's retaining all that pop, 6% higher because the numbers have been so good. In fact, as we get ready to welcome Ms. Sunita Reddy, let's just review the performance and see what's worked so well for Apollo Hospitals this quarter. I mean, it's a beat on almost all counts. The growth is good and it's above expectations. That's what's worked well for Apollo. The revenue has increased by about 15% at a top line level. The EBITDA is higher by about 33% odd. And even if you look at the margin, there's a very strong margin expansion that's come through for Apollo. Margins are now almost at 15%. Same time last year, margins were at about 13%. So near 200 basis points leg up on the margin. Their occupancies have shot up. Occupancies are now in the 70% range as well. So we have a bunch of questions, and I think we'll get to that conversation in just a bit as soon as we have Ms. Reddy. But in the meantime, beyond Apollo Hospitals, the gainers list is now becoming a little thinner and thinner. So there's Apollo that's moving up on news. There's Tata Steel, which is also reacting to good numbers. And then it's really thinning out because the market decline is now well entrenched. 140 points down on the Nifty. Just pull up some of the losers as well. Hindalco, Adani Enterprises, Ultratech Cement, and you also have Grasim on the way down. These are the 4 or 5 stocks on the Nifty, which are the weakest this morning. Let's take a break. We'll come back and get you more on the markets and also get that conversation going with Ms. Sunita Reddy of Apollo Hospitals.
Well, Hindalco is one of the biggest losers on the Nifty today, and that's because Novelis delivered its set of numbers, and the numbers were disappointing, but the street was bracing for a bit of a disappointment. Net sales moved up. However, the EBITDA number did come down, came in at around $462 million. Remember, this is the adjusted EBITDA that we're talking about. The hit came in because there was flooding at the Swiss plant, and because of that, they took a hit of close to around $25 million. Now, you even adjusted for that. If you adjust, the hit as well as the potential loss on sales volumes, then the EBITDA per ton would have actually been $502 per ton, which is reported actually as $489 per ton. So it would have been actually relatively better. But still, the problem is that scrap spreads have come under pressure. And that's why the management has refrained from going ahead with their guidance that they'd given earlier of around $525 per ton. Because Chinese have been buying more amount of aluminium scrap, which in turn is creating a scarcity of scrap and pushing up the prices, compressing their spreads. So because they've withdrawn their guidance, the street doesn't like that. The debt number as it is had moved up mildly at Novelis. So put all this together, street is a little bit cautious on it. The commentary on the auto segment as well was cautious, though on the cans business, they were quite positive. And the better margin business is the auto business. So put all this together, Novelis' numbers were disappointing. The withdrawal of the guidance is something that has spooked the street.
Okay, so Novelis under pressure. On the flip side, let's talk about a brighter spot in the market as well. Gujarat Gas and Endurance, these are two earnings which have gone down pretty well. So the stocks are still retaining their gains. So the overall market is a bit shaky right now. Gujarat Gas actually is up about 5%. I think that's what Sonal was mentioning, that volumes have been disappointing for most gas players. But there's a lot of margin expansion. The margin performance is something the market has liked. That's what it looks like. And the other one is Endurance. Endurance's numbers are good. Blue Star is very, very interesting because for Blue Star, at least at the consolidated level, there was 20% top line growth. Margins were in line with the poll. But Blue Star is selling off big time. Their unitary cooling products, the retail business, I think there's a lot of margin compression and the market probably doesn't like that. We'll try and get some more perspective on this as well and tell you what exactly went wrong with Blue Star. But that's a number that we're going to focus on in just a bit as well. 5% down on the stock right now. Okay, since we're talking about individual names, let's go across to Vinny and get a sense on Granules. Vinny, tell us more.
So yes, we're keeping an eye out on Granules today because after the con call yesterday, we had some positive commentary that came in on the Gagillapur facility, which was the one which had faced the US FDA issues in the month of September. So we had seen a bit of a slowdown this time because and a spillover in Q2, and that was expected in Q3. That's the company highlight coming in. But they are pretty confident that they will get resolved, the issues will get resolved, and they will receive a positive outlook from this come. They'll receive an EIR by the month of December. So positive outcome is what we're watching out for. This facility accounts for around 70% of their revenues, and in the month of October that started some bit of a staggered manner of production. Other than that, margins they're expecting them to be quite stable in Q3 and Q4, not much of a significant fall that one is expecting. They expect this run rate to continue in margins. Pricing pressure due to the competitive intensity, that is what something they're keeping an eye out on, and companies preparing for the new launches coming in from the GPI side, which will offset the slowdown that we were seeing from the Gagillapur facility.
All right, Vinny, thank you very much for that. We're just going to take a quick look at the market. We're down, 120 points, and things are looking slightly under pressure. But if you look at the broader market, I mean, it's not looking as bad at all. All right, well, let's welcome in the management of RITES now. The company reported a weak set for the quarter. Revenues were down 7%. Margins came under some pressure. We have Rahul Mittal, Chairman and Managing Director at the company, now joining in to take some questions. Mr. Mittal, great to have you with us here. Thank you for your time. Prashant this side. So Q2 has been soft for the company, especially in the consulting and the turnkey projects business. What has led to the weak execution in the quarter? And are there any specific projects which contributed towards this, and how are they working out in Q3?
Morning. Yes, Q2 has been a tough quarter. Some of our projects, both in the consultancy and the turnkey, have got impacted across various geographies, as you would have seen in this quarter in many infrastructure projects. Moving forward, we have to consolidate. We would be consolidating as we have been doing sequentially in this FY, and focusing on faster execution in the two balanced quarters so that we continue consolidating our position as we move forward. The satisfactory, we've been satisfied, and satisfactory movement is the breakthrough which we are achieving in expanding our order book across segments. We maintained our track record of being a one order a day company in this quarter. We got orders of 90 plus orders of about 700 plus crores. In fact, the fresh orders that we received in this quarter was more than the entire H1 of last FY. So this trend, as we continue moving forward and consolidating our execution, we would see a sequential improvement.
No, sir, but I think we need some more understanding of why execution is not picking up, because it's not one segment which is hurting, right? Consultancy, in India is down, consultancy abroad is down, turnkey projects are down. And if I look at even H1, the overall H1 picture, consolidated revenue, then revenue is also lower. So what is this challenge that you're facing with execution? And I'm not talking order book right now. Let's talk execution in the second half. Do you see it improving? How will it improve? And what can we expect in terms of revenue? Will there be any growth this year?
For sure. As I said, most of our projects, whether in this particular quarter, across various geographies, we are executing consultancy and turnkey projects of more than 600 projects. So many of them were impacted, as you would have seen in this quarter, across many geographies due to a lot of factors like rains in certain areas, certain constraints in certain particular projects. So sequentially, yes, definitely I see an improvement in the execution, both our consultancy and turnkey sectors moving forward in Q3 and Q4.
What kind of revenue growth, if you're saying second half will see an improvement, on a full year basis, will the top line grow? And if yes, even a rough range would work, 5% growth, 10% growth, what can it be?
if you see H1 to H1, there's a hit of about 100 crores on revenue. And if you see moving forward, we would aim to grow sequentially to reach at least the levels of the previous FY on an FY basis. So that's the focus. The growth in Q3, Q4 would be aimed at reaching an overall revenue levels as close as possible to the previous FY.
Okay, so at least at a full year basis, hopefully you won't see a dip in the current financial year. Got that. And on margins, sir, again, just to complete the picture on the execution, and then we'll talk about the future opportunities. On margins, because of this weakness, I think the numbers have now dipped to about 20% for the first half. As execution picks up in the second half, what is a realistic margin band that you would want to operate at, which you think you'll end the year at?
You see, there is, as we have been seeing, there is a dramatic change in every quarter in terms of the orders that we are receiving vis-a-vis competitor versus nomination. So as you enter more and more in every quarter, and while still maintaining a one order a day track record, your margins definitely come under more stress. So the levels of PAT and EBITDA margins that we've seen in Q2, about 20-21% EBITDA margin and PAT margins about 15-16%. Moving forward, the margins would remain more or less in this range.
This range being around?
As I said, EBITDA margins which you saw in Q2 about 20-21% and PAT margins about 15-16%.
Okay, so the margin profile will be around the 20% mark. Then that you're saying. Okay, so that's the update on the execution. Now let's talk about this winning one order a day. I think the total order book as of now is around 6,600 odd crores, 6,580 thereabouts, right? So what is the projected win rate, and you're covered for how many quarters with this kind of order book?
You see, the current order book, as I said, has been growing. This quarter, we got about 700 crores plus ordered. And the way it is growing, and even in the first month of quarter 3, we've already got orders above about 650 odd crores in 1 month. So our focus is that we continue maintaining this trend. Currently, as you correctly said, about 6,580 crores is about visibility of roughly about 2.5 odd years on an average. So moving forward, while focusing, as I said, on increased execution also, we would continue to focus expanding our order book. So ideally, moving forward in few quarters, you would try to touch the, the target of about a 3-year visibility in terms of order book.
Okay. And when you say 3-year visibility, what number gives you 3-year visibility? How many crores?
So 6,580 crores, I said about 2.5 years. Increased execution, growth in revenue would roughly mean another growth of about 1,500 odd crores in order book.
Okay, all right, got that. So that would then cover you for 3 years. Thank you, Mr. Mittal, for joining in and explaining the business to us. And your investors will definitely hope that along with the order book, the execution keeps picking up as well, which is the promise for the second half from the company. That's right on the radar. Okay, the market's steady, still down about 130, 140 odd points. I think now we can get that conversation going with the Apollo Hospitals. It's the best performing stock on the Nifty right now with a pop-up of around 6% because the performance, make that 7% right now because the numbers have been so strong for the quarter gone by. We do have, I think, Ms. Reddy with us. Yes, ma'am, great to have you on. I think the color of your attire is matching the sentiment around the stock today as well. It's a deep shade of green because you've had a phenomenal quarter. So let's start there. I mean, was there something exceptional? Because occupancies went up so much. There was margin improvement, 200 basis points margin improvement as well. So is this an exceptional pop, or are you expecting the second half to be as strong?
No, I think this was our second quarter usually very, very good. And occupancy is high, it's at 74%. This is a combination of both medical discharges and surgical work. So, we think that this is sustainable. On the whole, revenues grew by 15% on a consolidated basis. And in the healthcare space, 14%. In our hospitals, 14% growth in revenue, 14% growth in EBITDA, and 16% improvement in PAT for healthcare services, and 63% improvement in PAT on a consolidated basis.
All right. The Good morning, Ms. Reddy, and congratulations on a solid showing in the past quarter. I wanted to ask you a little bit about Apollo 24/7. You know, in the past year, I think FY24, you did roughly around 2,700 crores or thereabouts. And for this year, the street was working with a number closer to around 4,000 crores. Do you think that's still on the cards? Because in the first half of the year, you have done a number in the vicinity of around 1,500 crores.
Yes, so, 24/7 Apollo Health Co. clocked 2,282 crores of turnover. So we are quite confident that they will definitely close the year with 4,000 crores. But more importantly, if you look at the PAT, the first time they delivered a positive PAT of 19 crores. So in terms of volume of sales, in terms of profitability, it is done very well.
Right. We'll just, ma'am, good morning, Prashant here. Thanks very much. The hospital that you're going to be building and operating here in Worli, I mean, that is great news. All of us are here in Bombay. Although this is a greenfield project, ma'am, right?
Yes, it's a greenfield project.
So you're going to buy the land and then build up the facility in Worli, which is the heart of Bombay. What's the investment earmarked towards this? I mean, land prices and
over a period of time. So the capitalized value of the lease is about 400 crores.
Okay, total 1,300 crores.
Yes.
That is a total investment required to build this out.
Yes. Over a 2.5-year period.
Okay. And what are your expectations, ma'am, from this market? I mean, Bombay is a slightly different market than most others, you would agree.
Yes, our New Bombay unit is doing extremely well. We've onboarded some exceptional talents. So I'm quite confident that we should break even within the first year.
So that is going to be, so you're saying it's going to be up and running in 2.5 years and break even a year after that, within a year?
Yes.
Okay. Ms. Reddy, just want to reconfirm, I'm looking at a presentation. The GMV of Apollo 24/7 is 1,452. So this number will head to around 4,000 crores, right, by the end of this year?
The GMV, yes, it will.
Okay. All right. Got that, ma'am. So now, sort of big picture projections for all the businesses. Since we're talking Apollo Health Co., which has just turned into the black this quarter, right now the margin is just about 2.5%. What do you see as a steady state margin profile for Apollo Health Co.?
If you look at the offline, it is 7.6 with mature stores at 10%. I think over a period of time, the online will also move, if you add both the margin profiles, we should see about 7 to 8. And you must also consider the KeyMed integration. That will probably happen over a year. With that, sales moving to 25,000 crores in 3 years and 8% margin. And that's the figure you should look at.
So in 3 years, Apollo Health Co. will improve the margin profile to an 8% sort of level. Okay,
yes, this is with the integration of KeyMed.
After the integration of KeyMed, got that. Yes. So that's helpful. The other business, Apollo Health and Lifestyle, where right now at the PAT level, it's still loss-making. Loss was what, 4.5 crores, I think. When does that turn profitable? And again, I go back to the margin question. Right now, this business is steady at around 10%. So is this the steady state margin, or will we see a bump up as the bottom line turns profitable?
Yes, I think you will see a huge margin improvement, and this will come from growing diagnostics. So currently 404 crores of turnover, out of which 130 are diagnostics, but diagnostics is growing at over 20%, and margins are improving in that space. So that should lift the overall margins, as well as fact that the mother and child has significantly contributed to growth and profitability.
Okay, so any timelines in terms of by when do you break into the black?
Next year, I think next year, by the end of the year, they should be profitable.
Okay, by the end of next year. So end of...
no, by the end of this year. By the end of this year, you should see profit there.
Okay, and any thoughts of any strategic moves once this business becomes profitable? There are all kinds of, reports, a lot of buzz that does the round.
Yes,
on,
yes.
So tell us a bit about what you're thinking.
No, I think that from Apollo Hospital's point of view, this is all very important to Apollo. It's core to Apollo. So when we finish with our strategy session, I will let you know.
We'll really look forward to that, because I think the market's also, wanting to know more about the value unlocking opportunity, especially since you've given us the targets now that, Apollo Health and Lifestyle will turn profitable by the end of the current fiscal year as well. So, okay, that's very, very helpful. Maybe circle back to the bread and butter business, which has done so well, which is hospitals. Occupancies, ARPOB rates for the second half, if you could leave us with a view and a guidance.
So currently occupancy is at 73%. I think we should, despite the festivities, look at around 70% for sure. ARPOB currently grew only 3%. It's at 59,000, close to 60,000. But here again, you can expect to see an improvement of 4 to 5%.
Ma'am, a slightly sort of a broader question. You must have heard, we've got two instances. One, a hospital company talking about starting an insurance venture, Narayana Health. You've got Policy Bazaar talking about a sort of a HMO, essentially getting into the hospital end as well. Health services in that sense. I just wanted your thoughts in terms of how this is this, are we going to see more and more of this? Any thoughts at Apollo? How are you viewing all of this?
Yes, I think that definitely it's the way forward. At Apollo, we are building networks of care. So we have all the elements of creating, a community-based health organization with insurance in the back. 24/7 has launched its insurance broking portal. And with the connect that we create with this, we look forward to looking after communities. At this time, I have no plans that I can disclose, but we are watching the space very closely. And it's part of our strategy to win market share in these markets.
So it is, you can't disclose plans, ma'am, or firm plans? Or are you thinking in that direction? Maybe having a sort of an insurance?
Yes, we are thinking in that direction where we can look after communities. And the best way to approach, the solution to approach that is something that is work in progress. But we have all the elements currently within the system, including an insurance broking license. Yes.
Absolutely. But getting into insurance yourself under Apollo, maybe a different entity, is that possible at all in the future?
Right now, that's not, getting into insurance right now is not something that we're looking at. But we do have an insurance broking license. And using all this effectively, we should be able to move in the right direction with regard to looking after people's health.
Absolutely.
And making healthcare accessible to them.
So, ma'am, we are going to hold you to it because you've left us with two great teasers. One, we want to understand more about how you plan to look after communities, what that really will entail in terms of perhaps plans with, the insurance broking business. And the second, as you said, any further strategic moves that would be planned for some of the other businesses as they turn profitable. Thank you very much. Thank you very much for joining in and giving us a lot of perspective on the business. The stock of the day, Apollo Hospitals, with a 7% move right now. So this is an interesting one. But Prashant, this is I'm glad you asked that question, right? Because insurance brokers, health insurance brokers want to now set up healthcare in hospitals. Hospital owners are saying they want to somewhere get into serving the community with insurance. So wonder what we're in for.
The thought process is that the insurance company, the hospital and the patient, I mean, the interests have to be aligned. So if you're a hospital and you're going to be honoring the claims, which the patient, sort of the bill that he runs up in the hospital, it's in your own interest that the hospital doesn't overcharge. So, I mean, I think that's where...
some linkages between insurers and hospitals. Perhaps in the next 12 months, maybe we're in for
clearer
something.
Whether it's only for, say, for example, Narayana is right now saying that it's only for Narayana hospitals. And that makes sense. And of course, we are yet to hear more from Policy Bazaar on what they plan to do with that sort of, in that sense, backward integration. if you must. Well, Mitesh is now joining us with what he'd want you to do as far as specific trades are concerned. We're down sharply, Mitesh, 260 lower, so that's a complete reversal of at least yesterday, 24,200. What's the recommendation?
In fact, much stronger than what I expected. I was hoping the 24,300 will kind of come into play and the markets will not fall from there. But we already breached that level. And 24,120, 140 is the next area of support. I hope if it holds over there and then reverses, then that will complete a bullish inverted head and shoulder pattern. So very important that 24,120, 140 zone holds. As of now, we haven't gone long on the index because at 24,300 there was no sign of a bounce back or a reversal. But we're still trading with mild long bias on the stock side, and I have some long side ideas right now. NMDC comes the disclaimer that I have positions over there. We have call options, so there's vested interest. But there's positive news about bonus consideration as well as the chart pattern is very good over here. So buy with a stop at about 237 and look for target of around 255 to begin with. I suspect eventually I'm looking at 265 as well. So quite a positive setup over there. And the other one which I have is a sell on Aurobindo Pharma, which I would recommend selling with a stop at about 1390 for targets of 1320.
All right. Thank you very much for that, Mitesh. Appreciate it. So much stronger in terms of a pullback as compared to what Mitesh was sort of expecting. By the way, we are exactly at yesterday's low. So 24,204 was yesterday's low, and we are at 24,205. So, it'd be nice to kind of hold that and maybe be more sideways from here as compared to a down and down kind of a session. Already it's been quite sharp. Broader market has also flipped, but not by much. But 1,300 stocks are down and about 1,200 stocks are higher. That is the NSE declines to advances ratio. We'll take a break. See you on the other side.
Welcome back. So it's a bit of a quieter morning for the Nifty because the markets are now looking at an extended sell-off, 250 points lower. We'll get you more on that in a bit, but let's figure out what's happening in the world of global commodities. Have they managed to catch their breath after the whirlwind Trump victory and the Trump trade starting? We've got Manisha with the latest. Manisha, what is catching your attention?
Well, there's no time to settle down, really, because yesterday we've seen the presidential elections. Today is the Fed meeting, and tomorrow is the China stimulus measures announcement. So this week is going to be like that. But you know what? We have seen a very sharp cut come across into the markets there. The dollar index is trading at a 3-month highs. We've seen it put a biggest one-day gain since March 2003. And what the markets really are looking at right now is the fact that the Trump presidency perhaps will bring forth expectations of fiscal spending. That would mean tax cuts as well, is something that he's talked about. And then the street view right now is that the new tariffs could lead to inflation and trade tensions, and that would perhaps slow down the pace of rate cuts as well. And that is the scenario, or that is the narrative that the street is working with right now. I'll start with metals, where we have seen very sharp declines in the overnight market there. Multi-week to multi-month lows is how we're looking at many of these metal prices trading at. Some bit of a rebound in Asia coming in right now, as you can see on your screens, and this is ahead of the US Fed meeting and expectations of a China stimulus measure. But even with this kind of a gain, what we did see overnight into the markets was HRC steel falling to 8-week lows. You also saw the prices decline by 2.5% in the matter of last 1 month itself. Copper fell by 5% in the overnight markets. That one is trading at around 6-week lows there. We also are looking at zinc prices outperforming the declines on the lower side there. So a 6-week lows onto that. We've seen 5.5% of a cut come in for zinc prices in the overnight market. But in the Asian markets right now, there is some opportunity buying. What is not seeing opportunity buying at all is the precious metal prices, and very sharp cuts coming in for that. One, it was unwinding of safe haven positions because the US presidential election uncertainty is now out of the market. We saw silver prices decline by 5%. That one is trading at a 1-month lows right now. Silver prices recently hit a 12-year high of $35 an ounce in the international markets. That was on 22nd of October. We are trading at around 31 right now, with a threat of that being broken on the lower side as well. Take a look at the gold prices, and it has been a 3% of decline overnight into the markets. For gold, it was an all-time high of $27.90 an ounce. We are trading at $26.50 right now. So it has been $130 of a decline in last 2 trading sessions for this this one. But it's going to be about the US Fed meeting today and all eyes on that.
Okay, all right, Manisha, thank you very much for that. So that's commodities, but what's happening with currencies? Because the dollar is the global outperformer after the Trump win. And of course, that's putting pressure on the Indian rupee as well. Lata is here with what's in store. Lata, over to you.
Well, rupee is mildly lower in early trades today, whereas all other Asian currencies are rising. But that was the exact opposite story yesterday. We saw a steep fall across the board in all Asian currencies. The rupee fell, but it was the one that fell the least. So while we can talk of record lows for the rupee, what we should say is, although it is at a record low, it's falling much less than other Asian currencies. Just for comparison, I've given you a table of 2-day loss, or rather, a 30-hour loss for the last, for the Asian currencies. As you can see, rupee down about 0.22%, but look at the yen, 1.8%, offshore renminbi, 1.2%, onshore renminbi 1%, ringgit 1.5%, Thai baht is 2.2% lower, the Korean won 1.2%, peso not much 0.4, Philippine peso, and the rupiah 0.23. So those fallen less, but rupee quite clearly the outperformer, but will continue to see new lows. The Indian market dealers tell me that they are now prepared for 84.5 in this cycle of depreciation. That is, in the near term, they're prepared for that. For the year as a whole, or for the next 12 months, the expectation clearly is a slow depreciation of the currency. And the point is the Reserve Bank will intervene only to modulate the pace of fall, but fall it will. If you remember last year, up until a few weeks ago, many of the brokerages, Goldman Sachs, for instance, was expecting a slow appreciation of the currency. Mild appreciation of the rupee because we were seeing good equity flows. Remember the big flows in October and late September, as well as bond flows. They came in hand over fist. Bond flows have completely dried up now, and the expectation is that we are going to see a rewrite of brokerage reports to predict a rupee depreciation in pace with the Chinese yuan depreciation.
Yeah, I mean, given the surging US dollar, I guess one understands why a lot of the Indian participants are preparing.
If the tariff cuts come, how will China respond? They will respond by making the currency cheaper.
Correct.
To beat the difference. And therefore, a Chinese yuan renminbi depreciation is very much on the cards, according to economists.
Yeah, no, and for us as well, I guess, like you're saying, we
compete with them. Yeah.
We'll compete with them. And anyway, we have this whole FPI exodus issue that's still hanging over the market. So let's see, perhaps weaker days ahead for the Indian currency as well. Let's take a break on that note. We'll come back on the other side. Of course, we will take your leave, but Lata will continue with the special segment Indianomics. Today, she'll be in conversation with Jahangir Aziz of JP Morgan to talk about what this historic Trump win means for Asian and the Indian economy.